Friends, the topic of this podcast is how to make the most of this market rally. Many people did not expect this rally to be as strong as it has played out. It will probably stay this way for a while. It could acquire breadth, extend itself into other parts of the market which are further beaten. Everybody will try to scramble to buy beaten stocks. As a result, these beaten stocks, which are in any case most illiquid, may see a bump up. That will again make more people chase stocks. So we are going to have some shows, side shows, and after effects. Clearly, one thing that this rally is going to be used for is to raise money. And the ones to raise money will be the big companies. The big companies will raise money using this rally, and most of the incremental flows will be absorbed by them, whether it is from the FIIs or from the mutual funds. We will also see some large issuances, IPOs. Companies will find the fastest way to raise money, rights issues, QIPs, private placements, preferential. Every way of raising money will be used by hungry and snappy promoters. That leaves us with only the weaker ones, the smaller ones. They would not be able to do that. And that is what will set the course for the future. But whether you raise money or don't raise money, everybody is going to be in this struggle to regain their past glory, and the long haul will seem extended and never ending. So once this phase of capital raising is complete and all the buoyancy in the markets is used by companies, we are going to settle down to boring phases in each team, in each segment of the market. We will also see the reality dawn upon us. The fact that the economy is in a much smaller size than it was 1 year ago. And that from this size, it has to first grow back to where it was 1 year ago. And from there, it has to again start growing. So all this optimism in some parts of the market, concentrated buoyancy and hype, all the efforts to prop up some stocks as doing great, all this will play out for a period of 1 or 2 quarters. And after that, we will again go back to a long wait. So as an investor, what should you do? I would think that you should become more defensive. You should sell stocks which you think have performed very well in this period despite the fundamentals not improving or deteriorating. You should raise some cash to keep for an emergency or for an opportunity. And you should only hold stocks which you think will do well for the next 4 to 5 years. Many of the stocks which did well in the last 4 to 5 years have been rewarded by the stock market, and the rewards have been way in excess of the actual performance. So the valuations are very, very high. It is likely that while these companies will go through fluctuations and once again start performing decently, the markets will be in a mood to lower the rewards, and by doing that, valuations may taper gradually. So, this rally, the buoyancy that we are going to see should be used effectively to make portfolios more defensive, to raise liquidity, to get out of the risky parts of the market, to ensure that we don't own parts of the market where the future does not look good at all, and to keep portfolios which are reasonably valued and not very expensive. Doing this in the next 1 or 2 quarters is not an option for us. Every one of us has to do it. If you are a mutual fund investor, what would you do? Even there, I think that a lot of selectivity and judgment is warranted. In every market cycle after 2000, this has been the case. I have constantly emphasized this several times that when the underlying fundamentals change, your portfolios in mutual funds would also need to change. While you would still continue to invest the money in mutual funds, you need to take an entirely different approach. So, be it stocks or mutual funds, you need to reinvent, you need to recalibrate, you need to reduce your risks, and you need to extend your investment horizon. So, these thoughts matter to every one of us, whether you're a micro investor, a small investor, or a large investor. So, all of us would need to do this reset and stay the course investing for the long term. Happy investing, and thank you for watching this podcast.